the ways of when you get an audit notice, what we recommend to our clients is let's do a little bit of work before the auditor gets out there. Let's take a look at the work papers from the prior audit. Let's take a look at your reporting history. Let's think about what industry that you're in and where there's going to be errors. I know, like, multiple clients of mine, I already know where their errors are at when we're getting calls about new audits. I'm like, well, this is where your issue is. This is where we've seen it. We tried to clean it up, but sometimes because of all the different variables, it's just not really going to happen. And make sure that you understand what is being reported on your website, and that whatever it is that you're telling your client is in line with what's on your website. I've seen it too many times. I see it several times where somebody says, something, and then the auditor comes back and says, well, it's not what I saw on your website. I saw that you had 10 locations over a given state instead of 6, and just make sure that you're able to explain the reason for that difference. You're going to have different types of audits that are available. You have field audits, and in your field audit, you're going to have it's going to be a review of sales, and it's going to be a review of purchases. And basically, what's going to happen is your auditor is going to come out and they're going to say, okay, we want to look at on the sales side, let's control total everything. Let's figure out what our population is. Let's remove the document types we don't need. Let's identify the transactions that occurred in the state, and let's look at the invoices for a sample that I want to look at, and any related certificates that are available. And then on your purchase side, let's take a look at your expenses and your fixed assets. Same thing. Let's control total it. Let's remove the document types we don't need. Let's remove the accounts that we don't need. Let's make sure that we're only staying on items or reviewing items within the state. Then that'll be our population. Then we'll run samples off of that. And so what you'll see in this slide and in the next slide are the 10 most common issues that are identified for sales tax reasons. And then on the other slide, it's for items related to purchases. So I've been working on audits for 13 years. It's what I love doing. And I will tell you on the sales side, the issue that always pops up is exemption certificates. And my biggest issue is that in a lot of cases we've talked to clients before the audit started and we said, let us help you. Let us do some preliminary work to try to mitigate any exposure that's out there. And the first thing they always say is, we have exemption certificates, we're fine, we'll keep you in mind if something comes up. Well, 6 months later, something comes up and there's now a number wrapped around that issue, and they're like, we need your help. And so we start looking at these certificates and we're like, well, these are easier issues. I mean, we could have cleaned this up and not had to have come to this point. So I want you to take a look at this list from the sales tax side and think about everything. And I will tell you this, number 10 on this list is always something that I see: local taxes not charged properly. Think about what it is that you're selling. Think about, are you selling tangible personal property, or are you providing a service? And then think about, well, when you sold that property and you shipped it, did you ship it somewhere? Did they pick it up at X-Works at your facility? Did you ship it from another facility? What are the other issues? Did you ship it to a location where they picked it up at that location and then they used it somewhere else? I would say on local taxes, I see those issues a lot. You'll probably see more of that in oil and gas. If you're a leasing company, you can come into local tax issues. So I don't know if anybody is leasing equipment, but you can come into that because in a lot of cases, what they'll say is on the first payment, say you rent something to somebody over a 10-month or a 12-month period. Well, is the local tax the same every 12 months, or is it going to change? Generally, from what I've seen, the first payment on the first month's tax is going to be sourced to the location where the item was picked up, and then all the other locations or all the other months will be sourced to where the item was used. So figure out where you're at, what state you're in, and then figure out the local tax issues. That's always a big issue from what I've seen. On your use tax on purchases, again, this is a great list of you to think about how your company deals with these items, or if these issues have been identified in audits previously, and then think about if you have any policies in place to try to mitigate these issues. So what you're going to see in this slide and the next slide are related to sampling. I don't think that we really need to discuss sampling much, but basically what happens in an audit is you have this population, and the best way to review the population is obviously just to draw a sample. What I can tell you is the most important thing is make sure that you have somebody that understands sampling, and that they can work with the auditor, because if you're not asking the auditor questions, your auditor is just going to throw everything in the population, and all of a sudden you're going to be drawing a sample from a population that has $100 million in activity in it, when maybe if you had somebody with the expertise, they could have figured out that the population should have only been $50 million. I'm dealing with that issue right now in an audit where the auditor said the population should have been $160 million. The client pulled us in, we looked at it, now the population is $66 million that they're sampling off of. So that's the best thing I really want you to take from this slide and this slide. Obviously, samples are, it's randomly selected. In Texas, they're statistical samples. All of a sudden, a certain line item or there's an error, it'll project out because using the projection factor. So I want you to think about that. I know every state is different. I don't know all the sampling procedures in every state, but in the southwest area of Texas, Louisiana, Oklahoma, and certain other states, that is really where we can provide a lot of assistance. And I understand sampling in general, so it's definitely something you want to have somebody look at. So in instances where you have missing exemption certificates, what are some other alternatives that you can do? And what I want you to think about is, just because you don't have a certificate doesn't mean that you can't find another way to provide other documentation. I know right now in an audit that we worked on, we did not have the certificates, but we were able to find the screenshots. So we took screenshots from our client's system that demonstrated the accounts that were used, that demonstrated from that time period, and it demonstrated notes that were in the system that were not on the invoice. And we used that, we presented that to an auditor in place of, invoices. We actually didn't even have the invoices because they were so old. But we still, and it was on the purchases side. So that was something that we thought of, and we presented that, and we saved our client a lot of money. So I want you to think about, you can send out an XYZ letter to collect certificates. You can contact your customer if an exemption certificate's missing. And sometimes, if you didn't collect a certificate from your client or from your customer might have accrued use tax. So in that case, you would want to collect that use tax support to provide to your auditor, or just maintain for your records. Or your customer might have already been audited, and you would need support demonstrating that they paid that tax under audit. So those are also opportunity or options for any non-tax sales where a certificate should have been collected. The last issue on the bottom is when customers go out of business. What do? That is a tough issue. If you have identified customers like that going into an audit, I would recommend that you tell your auditor you'd like those removed from the population and reviewed in detail instead of sampled. Only because I wouldn't want those errors to extrapolate over a population. And then, I will tell you this, though, if you ask them to remove that from the population, they'll know automatically that's an error. So you need to kind of think about the amount of exposure and figure out what you're willing to live with. But just so that it's actually at a detail level instead of projected out, if the dollars are not significant, I would ask that those be removed from the population. What happens if you don't maintain certificates? And you're going to, obviously, if you don't have a certificate and you can't collect one from your customer, that's going to be scheduled as an error in the audit. And so not only will you owe the tax on it and the projected tax if it's sampled, but you'll also owe penalty and interest. I know penalty and interest can be severe in certain states, primarily like Louisiana, but I would make an effort to put a policy in place and have somebody go back and look at your activity for the last 4 years to see where exemption certificates are needed. So again, this talks more about your failure to keep records. I can't stress enough how important it is, and you also want to know, like, if you do a lot in sales, who are your customers? Who are those top 50 customers, and do you have something in place, or are you charging sales tax? I tell my clients all the time, figure out if what you're selling is taxable or non-taxable, and if it's taxable, you need to collect one of two things on every sale. You need to collect either A, sales tax, or B, an exemption certificate. And do not ask your customer for an exemption certificate. Just charge sales tax and let them come back to you and say whether there's an exemption, whether they're going to claim an exemption or not. Because what I have seen is that when vendors are telling their customer to provide them an exemption certificate, a customer that doesn't understand anything about exemptions will automatically just grab a certificate, fill it out, and hand it to you, and it's probably invalid. So I would just charge sales tax and wait for them to make the decision. Your customer should know what it is that they're purchasing and know if there's an exemption available. It's not on the vendor to manage that for their customers. So please keep that in mind. After you go through an audit, you have multiple ways to still try to reduce your assessment through. You'll go through an exit conference. You can have certain hearings, and then before you go to court, I would make sure that you exercise all of these options before you go to court. Because once you get into court, it's going to be all based off of documentation. You really want to try to settle at the appeal hearing or the board hearing. In Texas, we have redetermination, and I probably have eight audits right now in redetermination, and I tell all my clients we are not going to hearing. We can get this settled before that. You do not want to go to court, especially if you don't have documentation. If it's truly a technical issue, go to court. If it's material and if you're okay with the cost, but you want to try and clean up if you want to try and complete your audit before court. And I would also advise you to just make sure that you've been through that process, or you're using somebody that's been through that process, because a lot of times people say, oh, let's just go to court, and they don't really understand what all of that entails.